Hey guys, Lancer here. Hope everyone's doing well. Thanks for joining me. We're looking to some more stock market stuff. Now, I made a video a while back, I think it was about 2 weeks ago, which covered both the Magic cards, MTG stocks, and MTG Goldfish, and it also had the stock market recap at the end. I think I'm going to go back to splitting those up as individual sections because I felt like that was actually kind of an important video. I don't know if anyone actually stuck around until the end, but uh, during that video, I said what I was thinking might happen to the stocks, what the chances are. I said it was very likely what might happen because things were just going very rocky at that point. And the stock market did fall around about 8 to 9%. So over the last couple of days, we've obviously seen a bounce back. I'll just cover what's been happening with S&P 500, obviously the US 500 stocks, the dollar, the US dollar, which is pretty much the reserve currency of the world, gold, safe haven, meme stocks like AMC and forgot the other one, Tesla to see what's happening with Tesla, Apple, all the big names, and maybe even some stocks, stock markets like Australian, ASX, because that's where I live. So let's get right to it. Now, S&P 500, massive drawdown since we first got into this. It's fallen by about 12% from, what was that, just 5th of January. So 5th of January, start of this year, first working day, sell off, great start of the year, and not really, it's terrible actually. Now, oh God, I really wish I could get rid of this, but it's showing some important lines. So one of the main things is this is the 200-day moving average, the white line. The blue line is the 50-day moving average. You've got the RSI, which is showing weakness because it's below the 50, and the MACD, which is showing very weak strength. Can you say that? Weak strength? Anyways, so one of the most important things, as you would have noticed, is we dropped below the 50, dropped pretty fast. It cut right through the 200, but we were staying underneath the 200 for a while, and then we had a bit of a bounce, and we actually recaptured the 200. Now, what I'm thinking is going to happen is we're going to probably retest the 50, which is only about 1.9% away, and probably stay there for a couple of days before either bouncing up and recapturing all-time highs or getting rejected and then getting squeezed between the 50 and the 200, and most likely, if interest rates happen, dropping below 200. Now, why do I say squeezed? Because March 2022 is when the first interest rate hike is expected from the Federal Reserve of the US. There's many people that are expecting a 50 basis point increase, which right now it's at 0.01. So really not, most banks that are borrowing from or the governments that are borrowing from the Federal Reserve are not borrowing, like, there's no interest on the money they're borrowing. We get interest obviously for the mortgages, but that's how the banks make the money. So when they increase it by, let's say, 25 or 50 basis points, the market should have accepted that. So what I'm thinking is actually going to happen is March, at some point, when the Federal Reserve increases the interest rates by 25 to 50 basis points, I'm actually expecting the market to move up. Now, for the market to move up in that kind of environment, I would expect the market to have to be lower than its all-time highs, because in an interest increasing environment, the market kind of can react to the upside, but it doesn't make sense for it to stay there unless the Federal Reserve also comes back and says, we're raising the interest rates to 0.25 or 0.35 or 0.65, but we're doing it very cautiously. If anything looks out of step, we're taking it all back. The market will jump higher at that news, because that pretty much means the Federal Reserve is too scared to raise interest rates, which means that inflation is going to be hotter than anything else. Inflation is going to be hotter than parking your money in the bank. So people will continue to spend money and inflation will keep going higher because the Federal Reserve didn't call it and give the confidence that they're taking down inflation. I have also read a news article that said inflation is one of the most important things that US citizens are currently looking at in their budget. And I actually think that probably applies to worldwide as well because it impacts all over the world. Moving on, so S&P 500 probably going to stay in range for the next week or two, moving up to at least retest the 460, maybe even moving up, but I'll be very surprised if it recaptures the all-time high. But even if it does, it's going to be within a range, a big range of about 10%. So above the 200, below all-time highs. It's a big range. You're not going to make money if you're in the markets as a long term because it's going to be moving sideways for a couple of weeks. But if you're trading, then it'll be very, very choppy. So be careful. Moving on, let's do dollar. Dollar showing a lot of weakness. This is on the daily. The daily is easily the best one to really trust. It's above the 200. The 200 is still moving up. It's below the 50. It's below the 20. It's below the 9. Yeah, this looks pretty weak, but it's showing some strength on the RSI because you can see that one of the lows is high, the other low is higher. And if it does move up from this point onwards, it means that it's creating a higher low, which usually means it keeps moving up like that. I would still expect the dollar to retest the 95, but I would be surprised if it drops down. What it might do is it might just stay in this range until the 95 comes up and then maybe gets a boost from that 200-day moving in underneath it. And a lot of algorithms and bots and even traders look for support like the 200 moving underneath it or horizontal support where it's hit a key resistance or support from the side. Right now it looks like there's resistance at 94.85. It hasn't touched it. It's pretty much resisting at 95 now. So we'll have to see where that goes in the next couple of days, but I'm expecting it to stay kind of flat. Gold showing some strength above the 200. It's been very choppy for gold holders, but it does look like gold's about to take off. And I have a feeling that if it does take off now, it could it take out all time? It probably can't take out all time highs because all time highs hits 1940s and 1950s, or even sorry, even 2080. Damn, that's going to be pretty hard to take. But what I'm expecting is it probably will continue to stay above the 200 unless the dollar really goes crazy. Because I think gold is just a good way to beat inflation, even if the dollar is showing strength. The dollar isn't showing that much strength compared to what gold could be doing if the true inflation values are correct. Next, crypto. Crypto is doing well. Sorry, it's doing well if you compare it to what it was doing in the last couple of weeks. So I think a couple of weeks ago, I had a friend contact me just saying if it's a good time to buy crypto. I said it was super oversold, so now is a good time to get in. That was in this range over here. Obviously, I would probably let him know that there's caution coming up at 50,000 for BTC, which means that when BTC hits 50,000, Ethereum will probably hit. Wait, that's not Ethereum. Ethereum will probably hit 4.29 billion. That's Bitcoin. So that's 13% more for Ethereum. Um, yeah, good profits, almost a 35% gain. I think it's just you got to be careful when the 200 is above you. It's very easy for it to just fall off a cliff. Moving on, I think the GME we were going to cover. Uh, yeah, not looking good. Do I have AMC here without having to add it? That'll be good. Ah, should have prepared. Where is it? Maybe I don't have AMC. I thought I had AMC, but mm, I guess it doesn't really matter. GME is not looking good. I'm assuming AMC will probably be following it. I can see that there is strength coming up for GME, but that's only on the MACD. I mean, it's on the MACD and the RSI. So yeah, there is strength coming up. There is a chance that there could be a 10, 20, 30% spike for GME where it can go from 102 to 130 in a day or two because why not? That's what the algorithms have been doing for the last couple of weeks or months even. But I just don't know if that can hold because in a high interest rate or higher interest rate environment, it's very hard to just throw money around, and you can't just borrow very cheaply. Okay, Australian dollar looks so hard to tell. It looks bad because you got the really big downward curving of the US, the 200-day moving average. It doesn't look too good on the RSI. It's below the 50, but just the MACD is turning, so there's a chance that it could move up. It could go all the way to 73, and I still wouldn't blink an eye because it's up below the 200. It's when it goes above the 200, then I'll start paying it more attention. Oil doing really well. I think oil hitting 100 is completely plausible. It has to pull back now, but it probably can pull back all the way down to like 80. 80 seems a bit drastic, but maybe 85 has to pull back. Uh, Australian stocks. Now, this is interesting because they took a bit of a dive, just the same as the US. I'm expecting them to hit the 7,300, so another 2.4% gain, and then I'm expecting it to drop down again. So we'll have to keep an eye on that. Amazon doing well, but below the 200, so dangerous when you start getting to the 3366 values. And I don't know, I feel like that's enough. If there's anything that you guys want me to cover, let me know. Now, what do I think is going to happen to the economy? I think stagflation. I think that's very likely. I made so many videos in 2020. Wait, 2020? When did I start these? 2021. So I made some videos that I removed from this channel about markets and stuff. I really wish I didn't, because at that time I was kind of explaining what stagflation was. I was kind of explaining what the markets were doing, and I kind of just went against what people were thinking, which is back then inflation was transitory, whatever the word the Federal Reserve likes to use. And I just came out and said, no, I actually believe someone like Peter Schiff, who is probably more correct, where even if inflation is transitory, it's not like your wages are going to catch up, which means that it's going to be tricky to kind of get the same value that you were getting just 2 years ago. Anyways, guys, we're going to get into the nitty gritty. I'll leave it at that. I'm probably going to do some Kamigawa spoilers review. Actually, at this point, it's just reviews. And I'll see if I can go through each one of the colors. That'll give me 6 videos. They'll take a long time because there's plenty of them. But we'll see how that goes. And thanks for watching. Have a good one. See ya.